Hey folks, Tom Norfleet with www.citizenshipquickly.com. The big question that people have today is it possible to keep your tax rate to zero? Would you like me to actually help you obtain that goal? Well, I've helped people actually for over 35 years now avoiding high taxes. This can be done a lot more efficiently by you moving overseas and getting a second residency and a second passport if needed, and by setting up an offshore corporation. We started actually in 1983 onshore and then eventually went offshore. Offshore is actually better because you got more leverage in lowering your overall taxes. Would you like me to show you how to legally avoid all income taxes, capital gains taxes, dividend taxes, corporate income taxes, Social Security taxes, Medicare taxes, interest income taxes, inheritance taxes, estate taxes, VAT, sales taxes, stamp duties, and live in a paradise country that has great weather all year round? I can show you how to do this legally if you're willing to relocate and stay out of your home country a certain amount of time each year. If you're a U.S. citizen, you would need to give up and actually get a second passport and relinquish your U.S. citizenship to avoid all the taxes that I've mentioned. But you could actually still avoid a lot of the taxes that I just mentioned by just moving abroad and being out of the USA a certain amount of time each year, qualifying for what's called the Foreign Earned Income Exclusion. Still keeping your U.S. passport and not having to give up your U.S. citizenship. There is another option that can reduce your overall tax bill. That would be up to you and your company actually relocating permanently to any of the 9 states that the U.S. presently has that don't have a state income tax. And Puerto Rico also doesn't have a state income tax, but has a lower federal tax rate in the USA since it's not actually a state of the USA. The problem with Puerto Rico is the restrictions on the amount of days that you've got to be in Puerto Rico each year to get the lower federal tax rate. And now the IRS is cracking down on this real hard. The IRS will actually look at the times you entered and exited Puerto Rico to see if you've actually complied with that law. The lower federal tax rate in Puerto Rico has only to do with what is actually paid out to the corporation, not yourself. And Puerto Rico is now desperately wanting to actually become a state of the USA. And if that happens, the lower federal tax rate goes out the window and becomes the federal rate of the USA. You also would not be able to avoid the Medicare and Social Security tax by going this route. By qualifying for the Foreign Earned Income Exclusion credit, there is an exclusion on you and your wife's income up to a limit if she works in her own business or works in your business with no federal tax rate at all, up to that credit limit plus an overseas living deductions that you can actually take. And this limit goes up each year, and of course there's no state income tax. You could also set up a foreign offshore corporation that pays you and your wife's salary and no required payments to the IRS in the USA for the Medicare and Social Security tax, because foreign corporations do not have to pay these taxes. This would be if the Foreign Earned Income credit was qualified for and the Form 2555 is filed with the IRS. Whatever you pay in a state income tax, you can take off as a deduction off your federal taxes, but keep in mind that almost all states that do not have a state income tax will usually hit you with a higher sales tax or ridiculous property taxes, or both, as compared to a state that has an income tax. Texas, for instance, doesn't have a state income tax, but does have an overall property tax rate of around 2.18%, which is very high. Kiplinger actually came out with a quote that stated, if seeing your state take a bite out of your paycheck on top of whatever the federal government withholds really grinds at your gears, then consider moving yourself to one of the 9 states that don't have a state income tax, like Alaska, Washington, places like Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, and Wyoming that don't have a state income tax for residents. Be advised, though, that states still have to make up for the money, for roads, schools, and so other taxes are going to have to be paid to cover that. Texas, for example, has some of the highest property taxes in the U.S., and Tennessee has the second highest average sales tax. In addition, New Hampshire and Tennessee tax some dividends and interest, although Tennessee plans to phase out its tax by 2021. Also, if you relocate your business, I wouldn't do it unless you're really hitting a home run, because you also have to take in consideration, if your business moves, how's it going to actually affect your production income-wise, as far as your clients and the momentum in your business. This figure has to be considered. This is why I say that if you're going to relocate to another state, why not just move outside the USA and get your taxes to possibly zero, or even better yet, relinquish, whereby there's an unlimited credit on what you can make, because now you're not at the whims of the IRS anymore, and the rules set up for the foreign earned income credit won't apply to you anymore. These are big key things that that you have to look at. The IRS in the USA is actually considered getting rid of the foreign income credit. If you hate socialism and feel like you're paying too much in taxes, and you lost a lot of your desire to work anymore, because you have to work until May or maybe June of each year before you actually start making any money because of high taxes, I've got some great news for you. We'll show you how to solve that problem. Most people are actually looking for the cheapest thing out there, whether it's the cheapest offshore corporation, the cheapest second passport, the cheapest second residency, cheapest discount broker, or cheapest service provider to set up a bank account to buy equities, and a best place to buy property. And then they never make a decision to do anything. And they end up wasting tons of money and lost time and fees on equities or entities that they actually never implemented. Then instead of making a move on something, they'll just pay a ridiculous high tax bill for another year, and they could have gotten some help and paid a one-time fee and solved the problem and learned how to do this. I hear people all the time say that they're ambitious, they want to get things done, but then they never end up making a move to do anything. It can be done, but you need to do it legally and go by the laws in your home country. We'll only work with people that want to avoid taxes and not evade them. Evading taxes is illegal. Avoiding taxes is not illegal, even if you get your income taxes down to zero. We can only deal with investors or entrepreneurs that are making at least $150,000 US a year or equivalent in another currency, and or at least have a net worth of $1 million US. Otherwise, it's not really going to benefit them to do this. The first step is to actually move yourself and your business to a country that either has a territorial tax system or a pure tax haven. And then you need to invest all of your money that is in your home country overseas. And this can be done by putting your money into equities, real estate, or even gold if you choose to do that. If you're going to invest a lot in real estate and want to avoid an income tax on the rental income, the property should be bought in a pure tax haven country like St. Kitts, where there is no income tax on money made inside or outside the country. St. Kitts and Nevis are two countries but one federation. St. Kitts is actually the better of the two places to live and buy, because there are more amenities, doctors, and things to do in St. Kitts versus Nevis. And the appreciation of property long term is better in St. Kitts and Nevis than Nevis because of this. St. Kitts is real estate is actually some of the most undervalued of any of the pure tax haven countries in the world, where you can also get citizenship fast. Our firm is licensed to sell property in St. Kitts and Nevis, and we can work with you if you're an enrolled client with our company. To safeguard yourself and your wealth, you should get a second residency and a second passport in 2 different countries right away, and don't put this off. This acts as an insurance policy if your home country becomes a rogue nation, or they cancel or do not renew your current passport once it expires for some reason. Remember this: if you're outside your home country and your home country cancels your passport or chooses not to renew it once it expires, you will be stranded. You won't be able to work. You won't be able to renew visas, renew ID cards, or renew any sort of residency in your new country that you're residing in, because you have to show all the government departments in this new country where you're residing a valid passport that has not expired to get these things actually completed. If your passport has expired and cannot be renewed, you're stranded. You also won't be able to get the second passport or residency in your first passport when your first passport expires or is canceled, because all government departments are going to want a valid passport with an unexpired date to get all these things done. I think the key thing is if you wait too long to get a second residency or a second passport, and you get a civil or a criminal problem that comes up, depending on what the problem is, you're more than likely going to be turned down. Remember this: getting a second passport and a second residency is like buying hurricane insurance. If the hurricane is on its way towards your house, no one's going to insure your house. If you have an existing criminal or civil problem, there's a good chance you could be turned down for the second passport and citizenship, depending on what the problem is and when it occurred and was it solved. A crime in China would not necessarily be a crime in a European country or a Caribbean country, so each incidence of crime has to be looked at. Background checks are done on you and other family members if they are too are applying for the second passport and second citizenship, and you have to do this before you can actually get approved for the passport and residency. Don't put this off. Prepare ahead of time and get these things done before problem surfaces. Set up a foreign offshore corporation outside your home country, especially if you're a U.S. citizen qualifying for the foreign earned income exclusion to avoid the Social Security and Medicare taxes. We work with all the pieces of the puzzle, both onshore and offshore, so you're in compliant in what you're doing to get your taxes to zero or close to zero. We actually turn down a lot of people working with us. We look at a lot of things from a client before we actually work with the client, such as net worth. Can we work with the client? Is he equipped to motivate himself to do this? Is he coachable? Are we going to get along in this process? A lot of clients have their own ways of doing things, and they can be a headache to work with. So, I have to look at each situation independently. Folks, if you're paying high taxes, if it's not with our company, get it from somebody. Our fee is a one-time fee. If you're prolonging this issue, you're going to pay high taxes every year. Over a period of years, it's going to be a fortune. Get something done and get your problem solved. I would get in a second passport, second citizenship program right away. If you got a question, just comment below, and also if you're interested in getting a new video as they come out, just hit the subscribe button to the right of your screen and we'll get those out to you as soon as they come in. Look forward to talking to you on our next video. Take care. Bye.